The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we start out today with, I think, the task at hand is to look at the crude oil, folks. We have made a 78% retracement. We made it late in the day yesterday, right at that 41.77. And then early this morning, we went down and we took that low out by one tick. And that usually should have accelerated the market lower, but it did not. So I'm assuming that we're making a test right now here in crude oil at this 41.90 level, because we did rally about 60 pips. We backed off about 40, which is a 61% retracement. So this means that we're at the lowest level you could possibly ever trade crude oil as on a risk-reward basis, because your risk here is about 40 pips and your profit objective could be something really substantial. John Logan pointed out that it does have some support numbers down in this area, and anything below that is certainly not going to be any good. But this is what we're watching here in the oil. Should we get above 42.40, that would be up about 80 pips from the low. That would be a sign that, yes, we are turning. We're seeing the same type of pattern in the heating oil, but the crude oil is actually the clearest of all of the patterns that we're looking at between gasoline, crude oil, and the heating oil. So keep an eye on that crude oil here at that 41.90 level, and if it gets to 41.50, you would certainly be wrong. I would certainly be wrong, but keep an eye on that very, very closely. Now we owe our debt of gratitude from Jim in Bal Harbor, Florida yesterday, because we were buying some gold, and he asked us to take a look at the platinum contract because he had purchased some platinum, and I wanted to show you what had happened here. As you notice here, platinum was in a really tight trading range between 11.10 per ounce and 11.80 per ounce, 10.80 per ounce, a $30 range for 10 days. It could not make a 382 retracement. And as you can see here, we have exploded above that yesterday and then continuing on today. That was one of the keys that we were looking at to see if silver and gold were ready to make that turn. That's why we were interested, in purchasing them at that time. We'll take a quick look here at the silver, because we're trading $1 higher than this price that we have. We'll update the chart in just a little bit, but this is what's happened. We had those lows taken out from July 8th by just a penny on July 21st, and we pulled out one more time. And then yesterday, was the kickoff of all of this. And if you had just done a simple downtrend line from the July high, it would have triggered a buy somewhere around 19.80 per ounce in the silver, and we're up about 60 cents an ounce from that level. So it looks like we could be ready for a potential leg higher, but it's still a bit early. It actually is, because we've only had 2 days of this, but the fact that the market has come out of here very, very quickly in 2 days certainly means that we're probably getting ready for something a lot bigger to happen. We'll take a look here at the gold market for a little bit. This is a little bit late because I haven't updated the chart as of yet. I wanted to see how high we were going to get this morning. As you'll notice here on the gold, we're going to have a lot of resistance at 1358. At least we should. The key here is the fact that we had these really strong, and these are 4-hour charts. So this is a lot of trading that goes on between these bars. And as you can see, this market has exploded out of here, which is usually a very good sign. If you look to the left, over there after the Brexit. You see that long bar. It said suggesting higher prices, even after we had a $40, actually it was a $50 pullback in gold from 1370, down to 1320. We still went a lot higher. So watch for retracements in the gold market here, because I think this is a possibility here that we're looking at something that could really be really big. It's looking good in the platinum, it's looking good in the silver, and it's starting to look good in the gold also. Remember, gold made a high on July the 4th on that Sunday night, and if you will remember, we came down into the 20th, so we were down 3 weeks, and then we made higher bottoms on the 24th of July, and again on the 26th of July. And then that was the time to really look to be a buyer of it, which was around 1325, and that's what we happened to be on the air during that time, and it did go up. So we'll see if that's the case. Now, one of the things that I focused on over the weekend on the newsletter was the fact that the dollar index was making a beautiful Gartley pattern. It was as perfect as you could possibly get. And I wanted to bring that to your attention again, because whenever you see this happen in the future, keep in mind. One thing, let's just backtrack just a little bit. One of the best things you can do is to review, past market action. And if we took a look at platinum, and fortunately we had Jim from Bal Harbour calling in yesterday, and it was the day before yesterday, but if you'll notice, after platinum went up to that 61% retracement and stayed there for so long and couldn't go down, folks, that's telling you that there's a lot of people supporting that price in that area. That's what it looks like. I mean, it looks like it could really be, something pretty good. So give me a second here, and I'll put that platinum chart up again, because I think it's worth our attention for sure, because if a market won't go down, once it breaks out of that resistance area, which at this level had to be at 11.15 per ounce, it just exploded out of there, and it's almost at the 78% retracement of the high from 2015, and that's just in 2 days. So occasionally they reverse from here, but I would think that we're looking at something pretty dramatic here in these metals. That's pretty much what I'm seeing, at least from looking at the metals at that point. Now, I wanted to talk a little bit about the U.S. dollar index, because that's the one that I believe is the key to some of the things that we're looking at here. And we will pull this up and let you take a look at it, because it's done exactly what we had thought it was going to do. We went up, and yesterday, as you can see, let's make that on Tuesday. As you can see, we made a perfect Gartley pattern from the May low. It was a 1.618 expansion of the BC swing. It was 78% retracement from the high in February, and exactly 61% of the high from November. That tells you 3 ratios coming together, and that means we should be in for a substantial sell-off here of at least getting the dollar index down to around 94.80. Again, if you'll look at that big green bar on the way up from the C point, you can't miss it. It's the largest bar we had. That was the old Brexit bar, and that tells you that the market is really bullish. You want to be buying a pullback, but right now it's in a sell mode, and it should give you a move down to 94.80.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've had a question from one of our listeners about the gold. Where, if you bought the gold yesterday, where would you put a stop? Well, the buy came in between 13.25 and 13.28, and we rallied all the way up to 13.53, of course, in just a matter of a day and a half. So the logical place is, if you'll listen to John Logan, he said there was a lot of support in the gold right around 13.36. So I would say put a stop at 13.34. That would guarantee you at least a $600 profit. And away it goes. You also have the choice that if you wanted to, you could take a $2,200 profit here at this point. But this has the chance of, and again, that's a chance. And remember, chance favors the prepared mind. So you either take it here and miss part of it, or you put your stop in and take a little bit. So, and with the anticipation that you could make a great deal more. I frankly think the way that it came out of here after a 3-week down move, usually you'll get 2 weeks to the upside. Now, if the market's really bearish, it's not going to get any higher than what we got so far today. And because we stopped right at the 61% retracement in silver, up around that 2060 area, and we got up to 2053, 2056 is the 61% retracement in gold. So it could stop right here. So you have to make a choice, and that's what you have to do. There's no fine line here. You've got to be able to manage your money, and the best way to do that would be to use a trailing stop of $10 if you wanted to. But I think with the market jumping around like that, that's a little bit too small. So that's how I would handle it, and not worry about it. And don't look at it. Don't worry about it going up and down, because it'll do a lot of that. But remember, we're over into December gold this year. We skipped basically October. It seems to be a maverick month. It used to be one of the biggest months for gold as far as open interest, and we're certainly not seeing it this year. So some really big people are way out there in that December contract. So sort of pay attention to that. I remember the differences between those contracts because on January the 20th of 1980, when gold was making a high at 865, that was a high in cash gold that day. We were up $50 an ounce, which was the limit. We were trading about $65 an ounce higher in the spot. There was virtually no volume going on. I mean, there was nothing going on in the pit. And I remember calling in my order into the Goldberg brothers in New York, who did the clearing for Drexel. And I told the young man, Richie, I said, Richie, sell me one contract of Dees Gold, which was, this was January, so it was 12 months out. It was trading for well over $1,000 an ounce, and it was limit up. And I told him to sell me one contract, and I assumed I was going to have to take about $100 heat on that thing, but I thought that it had a great potential. And he said, Larry, he said, you're one of our best customers. He said, why are you throwing money away? And I asked him, I said, Richie, I said, how long you been on the floor? And he said, oh, almost 6 months now. And I said, okay, Richie, why don't you sell me two? He said, okay, smart A. He said, I'm going to do that. And so he sold it. He came back with the fill. And he said, okay, you're filled. And I said, okay, Richie. I said, buy me two contracts, limit down. And he said, you can't put an order in on that. I said, go ask your brothers. I said, you can put an order in on that. 2 hours later, I got filled, limit down. July 20th, 1980, we had over $100 swing in gold, and that was just the beginning because gold dropped from 865 all the way down to $230 an ounce into 2002 when it made its final bottom. Okay, enough for the stories. All right, let's do something I wanted to do yesterday, but I didn't quite get the time because we had someone call in, and I wanted to share with you this cattle chart because it's very important. We had Rich Anderson on. We were talking about this key level between 105 and 104 in cattle. As you can see, we got down to 105.60. Then we reversed. If you'll look at that reversal bar there, you see the little red box where it says reversal bar. What that means is you've reversed all of the previous days selling, and you're closing in the upper part of the range. That is a reversal bar. If you buy there, your stop goes below the previous low. And fortunately, on this one, you'll notice that the market gapped up and continued to go a lot higher. Now, one of my good friends, Mark Douglas, used to use that a great deal. And I'm going to show you one of the things that he used to do. You'll see the same pattern here, just a little bit different because it's bonds. And if you want to like use Jim Twentyman's motto and defy human nature and do the work yourself, but go back and look what's happened in the bond market over the past 3 days. This particular pattern yielded between $1,000 and $1,500 in profit all 3 days. In other words, you look at that opening range where you see the high and low. That's the first 30-minute range in Treasury bonds when we open, not the overnight market, but when we open. And then after the market goes down, you enter after you've gone above the 78% level. You put your stop below that previous bar, which that at this particular point would have been about 15 pips, and you let her rip. This one would have made about 1.5 points. That was Monday. Tuesdays did the same thing, and Wednesday did the same thing. So look at that. It's a really good reversal pattern for trading, not just bonds. It works on a lot of different things. And the reason it does is that you catch a lot of people by surprise. My mentor, John Hill, used to call this the upthrust reversal. In other words, the market, all of a sudden turns around and makes an upthrust, and away it goes. And that's one of the things that you want to, watch for, because those are the easiest to be looking at. So that's the bottom line of what we were looking at. We would have this pattern completing in crude oil if we get above 42.20 today, 42.20. So far, our high has been well, that would be less than that. If we get above 42.10, if we get above 42.10 in the September crude, that would be equivalent to the same pattern that we just saw in cattle. and that we saw in Treasury bonds. So watch that very, very closely. And the reason why it's important is that it is a reversal type pattern. Now, we're still trading down here at a 78% retracement of this whole early morning swing in crude oil. So if we go below 41.50, that's not a trade to do until it goes back above 42.10. You have to wait for the upthrust reversal. So keep in mind that it doesn't work all the time, but when it does work, it puts in a really nice bottom. And believe me, crude oil is extremely oversold now. We've been down for several months since we hit that fib number at 51. And, now we're down $10 a barrel and nobody likes it. So keep in mind that that's what we're watching. When we come back from the break here that we're going to have in a little bit, we're going to cover the Treasury bonds, and also we're going to cover the stock market. But also remember, folks, the Canadian dollar that we've talked about many times, and that's dropped over 100 pips from that 3-drive pattern that we had. And it stopped, the first stop was right at the 382 level. I'll put this in here so you can take a look at it. And that's one of the reasons why we had this move here. I'll put this in here after the break here.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've been asked to talk about Gartley patterns and gaps. And one of the examples that they've asked us to show is the chart of Apple. We did have earnings yesterday, and the market gapped up to, I believe, 103.95. It might have been 104. It might have been a fast tick at 104, but we never got above that. And the best way to do this is to, well, we got a caller on. Well, let's do our caller first, and then we'll get back to talking Apple. A good friend, Brent from California, is online. Brent, how are you today?
I'm doing great, Larry. Good morning to you.
Good morning to you.
I'm only calling to wish you a happy birthday, Larry.
Oh, I knew you would do that. You dog. This is actually call Ralph Elliott, the Elliott Wave guy. It's his birthday too. We have the same birthdays. But thank you, I appreciate it. That's the bad part about using Skype. It always tells you, the person's birthday. It's okay. I've been really lucky, Brent. I was telling Sarah last night and again this morning how lucky I really am to live to be 75 and still do what I've been doing since I was 30. It's been really blessed with great kids and grandkids and a spouse. It's been fun and great friends. Gee, I've been of which you are included. But thank you very much.
Oh, you're very welcome. I just appreciate everything you do every day. So just have a great day. Enjoy your birthday, and I'll talk to you soon. Okay.
You bet. Thanks a lot, Brent.
All right. Take care, Larry. All right,
yep.
Bye.
Yeah, well, the old cat's out of the bag. This is true. Anyway, let's get back to the markets. We take a look at this Apple chart. You don't have to be a rocket scientist to see that this market is in a downtrend. Everybody that's bought this stock over the past year is losing money. We had some good news, and what did it do? It gapped up right to a 61% retracement at that 103.60 level. The best way to handle that, and I think we talked about this yesterday in the room, is that you wait for the market to trade for a couple hours to see that it's not going to run away. And then if it doesn't, then you have a logical place to put your stop. So if you're trading a $100 stock, well, $103 stock, and it's only moving at 50 cents every couple hours, you know that you can risk for about $2 in that, which is 2%, which is an acceptable risk. Now, the question that we have from one of our people in the den is, how do you handle gaps in the Gartley pattern? Well, you handle gaps in Gartley patterns or butterflies or ABCD patterns. You have to handle them the same way. You have to handle them with a great deal of caution, because a gap is a danger sign. It means that something unusual has occurred in the market. But with the case of Apple yesterday, the gap was just mainly an emotional, the emotional part of the market just jumping up and down. That's the way I appeared, and it appeared to me. And so if you waited, for a couple hours and the market's not running away, and the second thing you had going yesterday in Apple, if it was going to work, was the fact that it would go into it was trading below the opening price, because it opened at 103.80 and it spent most of the day below that. So, and we're trading at 103.44 last night. So nothing really dramatic happening right here. Now, yesterday again, we had the market break a little bit actually, which was a big surprise. As a matter of fact, they almost closed the exchange because it was down for part of the day. But then after it came back, they kept the exchange open. But we have not really done anything to damage the bearish momentum, from my opinion. If we take a look here at which includes yesterday's action, you're going to see the New York Stock Exchange Index. The high was on July 14th. If you remember, Tom O'Brien on that day was on his show, and he thought that the high in the New York Stock Exchange Index was going to be 10,819. And I have to admit, he missed it. It was 10,810. So it missed a $10,000 handle by 9 points. That's 0.0001, folks. So hats off to our leader, the one who brought us the dollar, King Dollar, at 72. Anyway, unless we get really strong and close above 18,600 in the Dow, and blow this number out here of 1019, then we have to be really careful. Let's play the devil's advocate here for a second. Okay, let's look at this New York Stock Exchange Index chart very, very closely. If we were here and you were sitting next to me here in my office, I said, what does this remind you of? And all you have to do to remind you of what that looks like, and I'm going to remind you what it looks like because we're going to show you right here, and that is the platinum chart. Take a look at this. The doggone platinum chart stayed there for 13 days and didn't go anywhere. So if we blow out of here now in the stock market, you're going to be looking at something that's going to be, really, really bullish. So you've got to be, very, very careful here in this area. That doesn't mean you don't have to be afraid. You always be afraid, but that's what stops are for, is to keep you from, losing your cool during the markets running around. And try not to look at the machines because, those are the things that absolutely, drive you, out the wall. That's for sure. By the way, we don't exchange gifts, especially at this age, but I got a really great present yesterday. One of the students that I've been working with for well over a year and a half, contacted me, not because it was my birthday. He just wanted to let me know that he had definitely turned the corner and he had gone through the first 7 months of the year making really good money, and he was being consistent and still had his losses, but he had his profits. But it took well over a year and a half to get him to that point. But he came in with a great deal of baggage, and that means that he had so many losses and he had been doing so many things wrong that you had to break a lot of bad habits, before he got to the point where he could turn the corner. But he's certainly done that, and he's doing really well now. And that made me feel really good. But it took a while, but he was able to do it. Most people, when they start this, they lose a bit, lose a little, make a little, lose a little, make a little. Those that stick with it will make it. But new beginners, they have about an 85% chance of losing because they don't know what they're doing or why, and that makes it, really, really difficult, to pay attention to. I want to bring up this Dow Jones because I mentioned this figure 18,600. It's so very, very important here. If you will look at the this is the Dow over the past several months, as you can see here. That red box on the left that we hit back on the 14th of July, that was that 18,600 level that we were talking about. That's that 1.618 expansion of the move from June through July, also known as the, that first BC swing, down at this level. And that's why this number closing above 18,600 in the Dow would be something that you just better not stand in front of. Well, you could, but you should use a stop because it might not stop, and that would take us up to possibly even 19,500 or even possibly 20,000. But that's neither the same.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we are going to show the chart from my good friend Jim Flanagan from GAN Educators. Jim is probably not probably, he is the #1 GAN man that I know, and he really does a great job. But if you'll notice here, he has overlaid the 60-year cycle that GAN used in his work. And if you'll notice that we are over a time period around August the 2nd where that is expected to top. Now, we've had some pretty smart people here this past week. We had Bill Meridian also calling for a top here in late July. Shane Smolian from wolftrader.net also doing the same thing, and also Norm Winsky from Astro Trends. And now we also are looking here at the work of Jim Flanagan, who is really a phenomenal GAN person, plus just a really smart technician in his own right. But he does a great job. I'm going to have him as a guest very, very soon here on the air. But one of the things I wanted to do is the fellow that bought Lambert Gann's library. This was the library that Gann had that was owned by a man named Lambert, was bought by Billy Jones and Nicky Jones way back in the early 80s. Those are the ones that reprinted the Gartley book. I remember helping Billy get permission for him to print that book, because it was a $1,500 book, and to have it reproduced for $150 was really helpful to a lot of traders, because it would enable them to look at some of the wonderful work that Gartley did with his patterns. And that's what that's what it's about. But we'll get those folks on to take a look at it. Let's just take a look at the stock market here today. One of the things we've been watching was that head and shoulders pattern up at that 2170 level in the S&P. And as you'll notice here, we had some lower highs here on the 27th and again today. And then you'll be able to see that we have some really strong support coming in with an ABCD patterns forming somewhere between 2147 and 2145 today. So that's what I would be looking at for a potential bottom here in the market, is 2145 to 2147. If we should happen to get below 2140, turn the lights out, because we're going to go a whole lot lower. Anyway, that's what it looks like in the stock market, whether it's going to happen that way or not, but that's what we're looking at. Okay, we got a caller from Singapore. William, is that you?
Happy birthday to you.
Oh, you're gonna lose.
Happy birthday to you. Happy birthday,
You're going
Mr.
to make.
Pesavento.
You're going to lose all of my listeners, William.
Well, like Brian has just called in earlier to wish you happy birthday, but in Chinese, among Chinese, it says good things must come double. So you need to have one more guy at least to call and wish you happy birthday.
Well, thank you very much. That's it. I hope it's the last one. Hey, thank you very much, William. Stay along your goal, friend. I think it's got a little bit more to go.
Thank you.
We'll talk to you later.
Thank you.
Bye-bye.
Bye-bye.
Okay. All right. Let's get back to the stock market. As you can see from this chart on the E-mini, which covers the last 5 or 6 days, which gives you the major highs and lows, you would have a really nice 1.27 expansion at 21.47 and a 1.618 expansion at 21.45. Those are from two different swings, and those would be multiple ABCD swings. So that's why it would be so important. But going below 2140 breaks all that out. I mean, it's telling you that, that would really be a significant turn point in the market. This happens to be not only my birthday, but one of the most memorable days in my whole life as far as trading. It was 1973. I was standing in the promenade of Beverly Hills, which was the big shopping center at that time where they had the big stores that first started to come in, and I had tears in my eyes. I had more money than God. I had a couple. I had about $1 million and a quarter in my account, which was a lot of money back in '73. I had a couple of new cars. I had my kids' education pretty much covered. And I had tears in my eyes, and I had nothing to buy. I mean, there was nothing that I wanted that I hadn't already bought. And I had a new Rolex. I mean, should have been on top of the world, but I was really feeling very bad. I'd lost my parents a few years earlier, and had beautiful kids and everything, and I just really felt terrible. And after I had a bunch of psychological therapy, after I'd lost my money in 1974, I realized that was a big turning point for me in a very, very learned time in my life. But I remember it very, very vividly, like it was yesterday. And fortunately, I was able to, come out okay. But I certainly went through a period of about 18 months where I really learned more about the markets than I have, adding all the years together, because that's when I found the Gartley book. Had a little bit of knowledge on Fibonacci, but that was helped by meeting Bryce Gilmore back in 1987, and that was a big help to get me started, finding some of these things. But the Gartley book, by far, those pages 200 to 222 give you the starting point to work with, and then you add the ratios. But that's only part of it, folks. The toughest part of trading is the mental part. I mean, that's the most difficult part. Every time I think about it, I think of my good friend Mark Douglas sitting here next to me when he was writing the book, Trading in the Zone, and he would explain to me why the mental part was so very, very important, and he was right. I mean, it really is. You have to develop your own mindset. That's what you really have to do. You've got to be able to use that. You have to have a method of protecting yourself when you're wrong, because you're going to be wrong a lot. This isn't a game of being right or wrong. This is a game of making money. So you have to realize when you're wrong and when you're right. And that's the real key to that. The only way you do that is by building a belief structure of, what we're looking at. And that's the real key to these things that we're really trying to, keep an eye on. So let's just watch that mental part as you go through your trading steps every day, to have your own belief structure, and it's got to be yours. You can't use somebody else. The only thing you can do to people is guide them and get them to the front door and make them ring the doorbell. That's about all you can do. But that's very, very important to have your own belief system, that you're able to pick out, spots where you think you want to be a buyer or seller, whether you're using any type of methodology. I mean, if you look at how Basil trades and Steve Rhodes and Tom O'Brien, they each have their own little nuance in what they're doing. And the reason why they do that is they built a belief system on what they know works. And believe me, a lot of things work. You can't knock the stuff that they give you here at TFNN. It's really good. and you see some of the people in the room here that do an incredible job with the posts that they make, whether it's Mr. Z or Fletch or Jim. I mean, there's so many people in the room here that have some really good information that, it's really, really important to add that to your war chest to help you make the decisions. But you're the one that has to make the decision, boys and girls. It can't be anybody else. You're the big daddy rabbit, as they say in the trade. So, or the big dog, as they say at the Democratic National Convention. So, we'll watch this. Keep an eye on oil, because if we get above 42.10, that's going to trigger that pattern that we looked at this morning. Mark Douglas used, and also Rich Anderson used in the cattle. So we'll watch that very, very closely. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'm going to end the show by talking about the euro versus the U.S. dollar. That's 53% of the dollar index. And as we've shown you this morning, that we've hit 3 major numbers up here at this 98 level in the dollar index. We've already backed off a point, which is quite a bit. But if we look here at the euro, as you can see, we hit three major ratios last night, 78% from the high on the 14th, 1.27 expansion of the high on the 18th, and a 1.618 expansion of the high on the 21st. That's telling you that this is such an important point. But if you look at the wide-ranging bars that we have from yesterday to today, this market is screaming to you, I want to go higher. So if we get above, 111.30, we're trading at 111.10 right now, and if we get above 111.30, I would want to be short gold or silver or the crude oil, because this would be an indication that commodity prices are getting ready to make a pretty good run, because there's a very high correlation between the euro and commodity prices. In other words, when the euro goes up, commodity prices go up. So that has a correlation of about 65%, as I recall. So watch that number very, very close. Also, the key number in the S&P to watch today is a 2145 to 2147. Those are the two key levels to watch. Anything below 2140, and the game has changed. It's going to be would be down 30 points from the high, and that would be a tip-off that, yes, something larger is happening. But right now, the bulls are still trying to hold this puppy together. We've had a pretty good rally up to around 1162. Now, that's not unusual, because, you had a pretty good run here, and there's a lot of people that are short that are scared to death. So every time the market rallies, which we just did to a 61% retracement up here at 2162, it's just another factor of looking at it. If that's the high, and you measure the ABCD down, it takes you right down to 2147. So if we get above 2165, all bets are off. How about 2166? 877-927.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.